Welcome everyone to today's webinar. I appreciate your time and presence here. Over the course of webinar, we will deep dive into the budget 2025 and how it is going to impact your business. My name is Hani, your host for today. I have been working with Cygnet.1 for the past 2 years in the marketing department. I will begin the webinar by introducing the speakers for today. First, we have with us Mr. Anil Rajanala, an accomplished business head at Cygnet.1 with over 30 years of expertise in driving innovation and transformation within the tech industry. Renowned for his ability to harness technology to streamline tax processes, mitigate risks, and boost efficiency. He has established himself as a prominent leader in tech stack. With a diverse background across telecommunications, business process outsourcing, and tax technology, Anil crafts bespoke strategies to address industry specific challenges and opportunities. His deep knowledge and forward thinking approach makes him a trusted advisor in business process optimization. Next, we have with us Mr. Tapas Ruparelia, who is a qualified CA and CS with close to 15 years of experience. He specializes in handling the gamut of services in indirect taxes, which includes advisory, litigation, health check, and compliance services. As an associate vice president at Cygnet.1, he leads a team that provides solutions related to GST and e-invoicing in India, as well as global VAT and e-invoicing. Over to you, Tapas.
Thank you, Ani. Uh, and I welcome all the participants for this presentation on the budget. It was indeed a wonderful and an impactful presentation by the finance minister last Saturday, and some really forward-looking and important amendments came in specifically on the direct tax front. Over the course of this week, we are also expecting the new direct tax bill to be introduced by the finance minister. Nevertheless, the changes with respect to the slab rates of income tax, specifically for individuals, were massively slashed, and the basic exemption limit was increased by the finance minister, which was an amazingly welcome move and much required or much sought after since past couple of years from the government. This is expected to boost the consumption into the economy and drive further growth. There were also certain changes with respect to the customs provision, wherein the government has very consciously aligned the tariff rates, considering the global scenarios after the specifically after the election results into the US and the tariff wars that everybody is envisaging. I think it was a very right step into a right direction by aligning the tariffs into the Customs Tariff Act. Today's presentation, we are going to focus more on the GST aspect. There are a lot of amendments, while they were not discussed during the budget speech. They are as a consequence of the FTWZ GST Council meeting. And these are the amendments which are structurally amending the GST law per se. So there were certain interpretational issues which were there in the law. Either these interpretational issues were caused through various advanced rulings or certain judgments, and the most important and the most effective judgment, or the judgment which would have a biggest impact, is the judgment of safari retreats, which the government has tried to overcome through through the First Amendment. What the government is saying is that the words plant or machinery mentioned in section 17(5)(d) would be read as plant and machinery, and these change would be effective right from the inception of GST, that is the 1st of April 2017. Now, why this amendment? We are all aware that there was a judgment of safari retreats. In case of safari retreats, a petition was filed before the Orissa High Court first, and it was said that if I am into the business of constructing, say, a hotel, in that case, I am not using this hotel for my own consumption. This hotel is meant for further leasing and renting out, which is where the restrictions in section 17(5) clause C and clause D should be read down. the Odisha High Court did read down these provisions and said that in these given specific cases, the credit should be allowed. This judgment was pronounced way back before a couple of years, and immediately the central government had filed uh, an appeal before the Honorable Supreme Court. Now, before a couple of months, the Honorable Supreme Court came out with its judgment. It did not agree with the Odisha High Court, although the judgment did say that the credit would be available, but it was entirely on a different interpretation. What the Supreme Court said is that we are not going to read down the provision. The provision should remain as it is. But the Supreme Court highlighted that the words which were used in the explanation to Section 17(5)(d) were different were different than what is actually written in the section. And there, the difference that was highlighted is that at one place it is written plant or machinery, and at the second place it is written plant and machinery. And it seems to be a conscious effort on the part of the central government to make this distinction and give the benefit only in case and give the benefit also in cases where there is only a plant and not necessarily a machinery, not necessarily plant and machinery. Even if it is only a plant, the exclusion from Section 17(5)(d) is still applicable, and you are eligible to take the credit. This is what amongst the other things, the base crux of the judgment of the Honorable Supreme Court was there. And it was on the part of the revenue side when the hearing of this judgment, etc., was also happening. It was very vehemently said by the representatives of the government that this seems to be a drafting lacuna, and it was not the intention of the government to ever treat this plant and machinery and plant or machinery differently. In fact, there are certain states where the state GST laws has the definition of, I mean, the words are written plant and machinery itself. It is never plant or machinery. That was the argument that was raised by the government representative. Nevertheless, the Supreme Court held that because of this distinction available, the uh, benefit of input tax credit would be available in cases where the construction is being made for further use, specifically for purpose such as renting, etc. Now, to overcome this judgment, the government has said that we are going to replace the words plant or machinery with the words plant and machinery. And this amendment is going to be retrospective right from the inception of GST. Not only this, there is an also another explanation which has been added, which says that notwithstanding anything contained in any judgment, decree, etc., etc., this retrospective amendment would apply, which means that the government is very consciously trying to overcome the judgment of Honorable Supreme Court in case of safari retreats. So it is pertinent for the taxpayers who were actually waiting for initially when the High Court judgment came. People were aware that there is still a slight risk till the time the Supreme Court passes a judgment. Now that the Supreme Court has passed the judgment and the decision was in favor of the taxpayer, although through a different interpretation, uh, there were many taxpayers who actually were sitting on the ITC credit accumulation for these kind of cases and were not utilizing it and were waiting for the Supreme Court's judgment. They would have gone ahead and utilized this credit, not the entire credit, but at least the part of credit. In those cases, these taxpayers would have to again align their positions and would have to determine as to what they would actually want to do. There is also a possibility to argue that this kind of retrospective amendment cannot be made. It is against the fundamental principles, etc. But we have seen in the past the government going through retrospective amendment. And again, in order to challenge that retrospective amendment, one would have to travel right till the Supreme Court. And additionally, if the audience is not aware, would like to bring to your attention that the judgment of the safari retreats, the government has uh, already filed a review petition before the Supreme Court. So the judgment that has been passed by the Supreme Court, the government has already also filed a review petition. So the review petition combined with the retrospective amendment gives a very clear direction that the government doesn't want to give you this credit. And I think the taxpayer should form a view and take decisions accordingly. The second amendment which came in is deletion of Section 12, subsection 4 and Section 13, subsection 4. These two subsections dealt with the taxability in case of issuance of voucher. It said that in case of voucher is specifically identifiable for a specific supplier, then the tax applies at that time. Otherwise, the tax applies at the time of issuance of the voucher. Now, this definition of voucher as well as the taxability of voucher was taken from the European VAT as at the relevant point of time when the GST law came in into India. But after that, the European VAT itself has undergone a change. They've realized the practical difficulties which come in due to these interpretations. And the Indian law actually did not catch up with the amendments into the European VAT law. In fact, there were a couple of advance rulings which were adverse and also prescribed the GST applicability in terms of issuance of voucher, etc., in case of Kalyan Jewellers as well as Premier Holdings. To address these issues, so while the separatory judgment was something that was which was in favor of the taxpayers, which the government has overcome, the taxability of voucher was something which was creating confusions, and the certain high courts had held that voucher being supplied is as such not a supply under the GST law and GST cannot apply. The government seems to have recognized this and they have deleted the time of supply of vouchers. This was recognized in the 55th GST Council meeting, and a detailed circular was also issued by the government. If one wants to read the entire history, etc., one can read that circular so as to better grasp the amendments that have come in. Uh, Another amendment that has come in is in relation to insertion of clause AA into the paragraph 8 of Schedule 3. Schedule 3 provides activities which are not treated either as supply, of goods or services on which tax doesn't apply. Retrospective amendment in this case also has been made, wherein it has been said that supply of goods warehoused in a special economic zone or a free trade zone to any person before clearance of goods for exports or uh, to DTA before supply outside these SEZ or FTWZ would be considered not liable to GST, would not be considered as either supply of goods or services. This was much required because uh, the provision earlier, the paragraph 8 covered certain scenarios wherein it was mentioned that warehouse goods will be exempted. Whereas in terms of the express definitions of FTWZ as well as SEZ, they are not specifically treated as warehoused goods so far as the customs law is concerned, which led to a lot of confusions and again certain interpretational issues at the department end. So this is again a welcome move which the government has retrospectively inserted a clause into the GST law saying that supply of goods within the FTWZ or SEZ before these goods are being cleared outside the premises of FTWZ or SEZ will be not liable to GST. However, one has to also note that the government has very specifically said that if any tax has actually been paid on these transactions till now, no refund shall be granted. And this is what has been the general behavior of the government is so far as the retrospective of favorable amendments are concerned. If you have paid any tax already based on the adverse interpretation, you don't get a refund. But going forward, if you have not done this because of this retrospective amendment, you can claim the benefit. One more change that has come in is the definition of local authority. The definition of local authority till now, so far as it is concerned for the GST law, the definition of local authority was important so as to determine whether the tax is payable under reverse charge and for certain exemptions as well. This definition of local authority used the word municipal and local fund. Now the definition of local authority has been changed, and municipal fund and local fund have been mentioned separately. And within this definition, the municipal fund as well as the local fund have been defined separately. Uh, Certain other changes. One change has come in which is with respect to the appeal process. Till now, in case of matters where only penalty was payable, in those cases, only the cases which were concerned with detention and seizures of conveyance, which is the e-way bill matters, only these matters, in these cases, earlier in terms of Section 129, there was 100% tax and 100% penalty was payable based on certain judgments, specifically of Gujarat High Court. The law was amended to provide that in case of violations of e-way bill matters, uh, the penalty of 200% would be payable in these cases. Now, normally when you clear a conveyance, when a conveyance is seized or detained, it is in most cases you have to pay the 200% penalty in order to get your conveyance released. So this penalty, the process which said that you have to pay a pre-deposit of 25% was actually not relevant till now, which was anyway still existing. It was only in some cases where circulars were issued and said that if you are giving a bank guarantee, you need not pay the 200% penalty. In those cases, people were filing appeal by payment of 25% of pre-deposit. Now, with this amendment, it says that not only that the EWA will matters, any case where only a penalty has been, an order with respect to penalty has been passed, in those cases, if you want to file an appeal, you have to pay 10% pre-deposit at the first appeal level, 10% of the penalty amount. And if you want to go to the second appellate level, which is at tribunal, you have to pay another 10% as pre-deposit. That is what has changed so far as the appeal process is concerned. And one another important point which has come in, which is a track and trace mechanism. A new section 148 is proposed to be introduced. This section says that in case of specified goods or specified persons or a class of persons holding specified goods, whichever are specified, which means that these are notified, these goods or these class of persons possessing these goods will have to have a unique identification marking on these specific goods, and these marking would include a digital stamp or a digital mark, something which is non-removable from the goods and can be easily identifiable. And in case of failure to meet with these provisions, there is a minimum penalty of 1 lakh or 10% of the tax payable on such goods, whichever is higher. Now, why this track and trace mechanism has come in? There are certain goods which are being smuggled. There are a lot of goods which are counterfeit, which are being made available in the market. In fact, there are certain products wherein the government is aware that the quantity which is the goods are not being manufactured in India, the quantity which is being reported as imported, the local sales of this product is 10 times or 100 times. So there's a lot of counterfeit stuff going on, as well as in order to tackle with the fake invoicing cases, or ensuring that the certain quantities which are prone to malpractices, the government ensures that these goods are marked so as to track these goods on a real-time basis. A detailed scheme on this will come. This is only an enabling provision which has been made into the budget. A detailed enabling scheme would come out by the government in terms of the relevant rules. Now, after these amendments, these are all the law-related changes which have come, which make the structural changes into the GST law, try to adjust the language of the law so as to bring out the interpretation of the government. There is an important amendment also which has come in into the budget, is related to IMS provisions, and there have been a lot of budget seminars, etc., where certain points have been raised, but it seems that some interpretations with respect to credit note, etc., are being made on an isolation basis. So we thought of combining all the IMS provisions together versus tying it up with how the advisories are currently working in terms of IMS and how these amendments are going to affect the IMS related changes. This is what we are trying to achieve on this slide. So the first change that has come in, I would first look at the changes which has come into section 38. The word the section 38 used the word auto-generated statement, and this auto-generated statement was referred to as GSTR 2B in rule number 60 of the CGST rules. Now, this auto-generated statement word has been deleted from the provisions of the section and has been replaced with the word statement. So the word auto-generated has been removed. Now, why this is being done? For this, one has to take a step back and understand the entire IMS process, which in the next slide, Anil sir would definitely take it. But on a very brief basis, people who have gone through IMS or have tried to understood the IMS or worked on it, we know that as and when I keep changing my actions on the IMS, once the my GSTR 2B is generated, or even otherwise, as and when once the GSTR 2B is generated and I go back and change my actions, I have to recompute the GSTR 2B. Similarly, if I have not filed the returns of the previous month, then my GSTR 2B doesn't get automatically generated. I have to go and click on recompute GSTR 2B. So the words auto-generated GSTR, auto-generated statement wouldn't align with the objectives of IMS. This is where they have amended section 38 to remove the words auto-generated and have kept the word statement, which now aligns with how the IMS functionality is going to work. based on your actions on the IMS portal, your GSTR 2B will get generated. You will have to recompute GSTR 2B each time you go and change your action. So this is one big amendment so far as IMS is concerned. We have been getting questions right from the month of September from all our clients that when is IMS going to be made mandatory, or if at all the government is intending to make IMS mandatory. Right here, the answer has been given by the government through this budget. They have made those structural changes into the GST law in order to communicate to the taxpayers that yes, we are serious with the IMS requirement. Similarly, second thing was if you are aware, in case of IMS, if you are rejecting a credit note as a recipient, then the liability of the supplier gets increased to the extent of credit note that the supplier had issued and had reduced his credit. The liability of the supplier would increase. Now the questions were being raised that who gives an authority to the government to regulate my liability as a supplier based on IMS action which doesn't have the legal backing of the law. Now, once the section 34 has been amended and notified, as well as the new rule 67B has been introduced by the government, the provisions with respect to not allowing the supplier to reduce his liability through the credit note unless and until the recipient accepts the credit note is going to take effect. So going forward, once this is made effective, the supplier may not be in a position to say that I do not have a control on the actions of my recipient, whether he has rejected on IMS, etc. I don't want to follow it. I will not increase my liability. I would still manually change it. That would not be possible once this is implemented. Similarly, an amendment has been made to Section 39, which says that GSTR 3B can be filed only and only after your GSTR 2B has been generated, which means that through your IMS actions, the GSTR 2B will get generated, and that GSTR 2B value is going to get auto-populated into your GSTR 3B, which of course right now can be amended, but we have seen that advisory where the government intends to lock your liabilities of your GSTR 3B on the outward as well as inward side. So this seems to be a step towards the locking of GSTR 3B, wherein the data of your GSTR 2B will get auto-populated into 3B, which you will not be able to edit. And this GSTR 2B will naturally get generated from IMS, the backing of which is being made through these three sections. Would like to appraise the audience that amendments to the GST rules would also come. The new Rule 67B, Rule 61, Rule 60, which deals with the procedural aspect of generation of GSTR 2B. These rules will undergo significant change once the government notifies the changes onto the rule and makes IMS mandatory, which seems to be only a couple of months away, if not days. So yeah, IMS is definitely going to be mandatory, and it seems to be clear from the intentions of the government. Over to you, Anil sir. Sir, you're on mute.
Sorry. Yeah. Thank you. Thanks, Tapas. I think by and large, the regulations which Tapas has highlighted clarifies the matter that IMS is here to stay, and not only stay, but become an integral part of our new way of compliance. What is likely to happen? And one of the words which he has used was this auto-generated statement will be replaced by statement, which only goes on to say that unless otherwise you take an action on IMS, the to be cannot be computed. As simple as that, which to a very large extent goes ahead and puts that factor into place that invoice management system. We all need to get used to it. What it means, it is nothing but the same as what government has been talking earlier, that please give us clarity to the ITC that you want to claim against which invoice, specify invoice-wise details to us so that the entire system is as transparent as the way you want to have it. Accept, reject, keep it pending. No action is uncalled for action, I would say, because you would invite problems for yourself by blindly taking into anything. To my mind, this point would have been given more so to address the lower end of the market where there are a few actions to be taken, and this becomes by default. So In the new invoice management system, suppose if you can go to the next slide. Yeah, thanks. So what we are trying to say here is the data comes from IMS on a daily basis. There is an independent module of its own. They get data from GSTN every day. I would say it is a little more proactive than every day. Government is ready to start giving data within 2 hours of e-invoice generation. That's how seamless that entire flow of data would be from the uh, government end into the IMS module. The second part of it would come is your purchase entry. The minute these two match up, then you would do the reconciliation, which one more part becomes very, very obvious is with IMS, you would be mandated, not in writing, but in functionally, to do a reconciliation, and that too on a digital platform. Because now, whatever invoices you are accepting, you will have to have those details and you will have to share it parallelly with the government in the form of an IMS action. So reconciliation, a pre-reconciliation prior to IMS action will become a mandate. Now, there would be subsequent requirements for large corporates to take the data back into the ERP. Both the reconciliation as the IMS action is perfectly feasible. But what this reconciliation also does is help you with bulk IMS updation into the IMS module. And then you can take your subsequent action the way you want to take it and push it into GSTN. Next. Thanks. So here what we are saying is there will be a seamless download of data into IMS. There will be a pre-IMS reconciliation, which will help you validate the data and then enable you to take a call whether I should accept, keep it pending, or reject. This is done with the perspective that you don't have to do any activity manually on an Excel sheet. All required probable buckets to help you reconcile with your purchase data has been inbuilt into the system so that every single decisioning that you do can be worked out with the end result to decide whether you want to keep it as accepted or you want to keep it as pending. And the third most important part, what would one want to do once an AMS reconciliation is done? You would want to inform your vendor or supplier immediately that I have kept your invoice in pending, or these are the mismatch issues. Please resolve it. Now, please understand few things with the implementation of IMS. As Tapas has been highlighting, 3B in all probability is likely to get locked, which would mean my supplier must have enough time to take action on any IMS based output that I have. Anything there is a mismatch, anything there is a, I would say, pending, he needs time to do it. That's where we have incorporated this notification module, which immediately, the minute you take your IMS action, the same day, this input can be flashed across to your vendor, not only through email, but using the GST APIs, including the notification center of his GST and ID, so that a perfect legal trail is available to show it to him also that what changes is required for you to take corrective actions you must take, so that required updations are done from his end and you are in a position to push the respective IMS status from pending to accepted based on the action he takes. For that, a seamless communication notification mode is required. So now here we are talking about three things. One, you're getting seamless data. Once you get the seamless data, you get immediately a pre-reconciliation opportunity with all logics, CIML logics built into it. Once you take the reconciliation option, the system gives you the opportunity to take bulk upload action into the IMS module. And fourth, once you take the IMS action, it gives you an opportunity to notify to your vendors immediately on the action that you have taken, and then the action you expect him to take to correct the situation. And post that, finally, you push the data to IMS. And finally, once you have pushed it, there is one more aspect, that the minute you do the part of it, that 2B gets computed post 14th. And once you file your 3B, the data from the IMS portal gets purged, except for those which are in pending. The rest, everything gets purged. And that is where we as a GSP keep the data back in, keep the data back into the entire module, so that it is available on request whenever required. Next slide, please. So as I was explaining to you, the reconciliation module. The reconciliation module here is, this is the pre-reconciliation module, where the sales data comes, your IMS data comes, you take all pre-active action, and based on that, it gives you the opportunity to do bulk IMS actions straight away from here, based on what is matching and other details. Next. So these are the various buckets where, based on which you can take your IMS action. Match by tolerance. If something is on PR only, you might want to keep it pending. IMS discarded cases, mismatches. So based on these areas, you can put in your own logic, define what you want to define as to be treated as accepted, to be kept as pending, to be treated as rejected. So the system automatically starts putting each of these aspects into various buckets and start taking reconciliation actions. And once you have taken these actions, the system will help notify to the vendors immediately. Next. So this is the impact on the outward supply. Once you have done your action onto the outward supply part of it, monitor the customer actions, then based on that, the accepted, rejected counterparty actions is also visible onto the system of what the counterparty has also taken place into the counterparty action once the issue has been done. So a two-way impact of the overall decisioning is available for you to take proper action. Next. And this I will help you. I think while we are discussing about this, one aspect which has definitely been on top of the mind for everyone is the credit note issue. So Tapas, if you can just help them take through this entire thing.
Sure. So, couple of points worthy of giving a thought pointed out by Anil sir. Challenges of wrong invoices right now is that once you raise an invoice which is covered under IRN, you only have an option to cancel it within 24 hours. And once that time limit of 24 hours is gone, all you have, or the only option that is left with you is issuance of a credit note. Now, imagine a scenario where you are issuing an invoice to a person uh, uh, who is not your customer. The wrong GSTN has been entered, and when that person realizes it's not their invoice, they reject it. Once they reject the invoice, they don't take the credit of it, but your liability doesn't disappear on the basis of invoice rejection. It stays as it is. Now, in order to correct this particular invoice and uh, take the credit, give the credit to the rightful recipient, the only option is to issue a fresh invoice and cancel this invoice to credit note. Now, once you issue a credit note also for the current invoice, the supplier would, the recipient would say that I had not accepted the earlier invoice, I had not taken the credit. I would not accept this credit note as well and reduce my liability. So the supplier is going to be in a soap in this kind of scenarios. So one has to also be very mindful that while the government has till now said that IMS is optional, the moment your customer rejects a credit note, it comes and sits into your liability in GSTR 3B in the next month's return. So it cannot be said that it is voluntary. Specifically on the supplier's part, it is not something which is it is not an optional functionality. It is something that you mandatorily have to keep checking as to if you are issuing a credit note, whether your recipients are accepting or rejecting it. It's okay if they don't take any action, but if they're rejecting it, then there is a problem. Credit notes, anyways, you cannot keep pending. The only option that we see in this case is the government allowing e-invoicing to be amended. Once, if that is something that is allowed by the government, amending of e-invoice, then I think that resolves all those issues where credit notes are being issued for the purpose of cancellation or correction of invoices. If there was a correction required in my e-invoice, if the government itself allows changes in e-invoicing, I think there would not be any need to cancel that invoice and raise a fresh invoice. And I think that would deal with a majority of the issues pertaining to credit note. But again, if for other reasons also like discount, value change in supply, etc., if you are issuing credit notes, that issue still remains. You have to ensure that your recipient is accepted or at least not rejected that credit note.
Thank you.
One
Thanks,
other point also,
Yeah, please, please check.
that has to be kept in mind is that either you are fully into the IMS regime or you are outside the IMS regime. You cannot say that for certain invoices where I have taken reject action, I wanted to follow IMS, but where auto acceptance has happened, I don't want to follow whatever has come to the portal. I'm going to go and manually change my GST or 3B. That is something that may not uh, go down well with the officers down the line a couple of years. Similarly, while it is easy to say that we are not going to follow IMS and we are going to, the system follow deemed acceptance procedure, we are okay with it. One has to also closely look at how these deemed acceptance kind of actions affect your commercial obligations. Can you still go and again commercially challenge an invoice, reject it, or dispute it with the vendors if you have if the invoice has been marked as deemed accepted on the IMS portal? So that's also something one has to keep in mind.
The minute somebody gets into deems acceptance mode, I'm sure even credit notes will follow through into the same thing. You would by and large accept everything. So the challenges are far more higher. I agree with you. And I think there is one more part which, since I've been talking to other corporates also, we've been saying that while these rules are changing, there will also be a need to relook into our own current processes. I am not talking about the uh, functional process, but the actual business process. For example, taking a credit note or accepting a credit note once a month from your supplier. Maybe the time has come where you might have to start telling them or start sharing every week so that I can keep, looking into this data, reviewing it, start correcting it on a regular basis. A lot more things are likely to change. Whatever we are used to as a process with IMS implementation will have to be reviewed. And we will keep seeing these changes as the time comes. So one of the aspects which we are helping change this entire perception is the notification part of informing you about the entire aspects of the IMS action and giving sufficient time. The whole objective here is how do we provide 10 to 15 days minimum to every vendor to take an action against a transaction in a specific month. That's the core of that entire thing from the notification perspective. And let me address one more very specific question to answer this part of it. Yeah, can you go to the next slide, please? We all know our current state of business operations. We get our purchase entries within 15 to 20 days. But by and large, for most of the customers we've been talking, and I know it because we have given our IMS for trial run for the last 2 to 3 months. And I've been seeing and talking to customers very specifically that, sir, I see that you start your work onto this IMS module only after 25 to 30 days, practically saying that 15 to 20 days after the purchase entry is done, one would gradually start acting onto it. And if we understand our reconciliation process correctly, most of the time we get the purchase entry into the first week of the subsequent month. We do the reconciliation and hardly have 4 to 5 days to take any corrective action. Now ask a question to your own self. What if we continued the same process? Here is this IMS module. You get your purchase entries on the, let us say, first week of the subsequent month. You do your entire IMS actioning, reconciliation, everything, and you have this bunch of pending mismatches and everything. do you think the vendors will be in a position to get back with the corrective action in 4 to 5 days? From wherever I have been talking and discussing to large corporates, they say not feasible. The only thing it is feasible is if, let us say, it is the first of the month and I have the purchase entry by the 5th or the 7th of the month. I am in February. If I get my first February invoice by the 5th or the 7th of the month, I can start doing my IMS action, inform through the notification module to the vendors. Then, on an average, by and large, every invoice will get 15 to 20 days for actioning, except for the month end cases. Maybe the 30th or the 20th of February case will get 10 days. By 14th, you have to compute the 2B, 10 days. So, let us say, even if I am getting the maximum invoices by the 4th or the 5th of the month, I still have 1 week to do. The whole objective is how do we get the purchase entries within 5 days of the entire invoice generation. Let's understand this is practically feasible. Next. So what are the aspects that you're talking about? The first part is how am I collecting the invoices from the customers today? One, by email, or a large organization can put its own vendor portal. Let's presume that it is the invoice collection part through the email. I think you will have to keep moving. Yes, thanks. So let's say that if I create one email ID, purchase invoice at the rate Cygnet.1, all the invoices, purchase invoices, if start coming to this one email ID instead of the email IDs of all stakeholders in the organization, I would be in a position to immediately collect the invoices from there. And how much time does it take to collect an invoice? It is as much time as while I'm talking to you. You only have to take a PDF, upload into the email, and say send the invoices with me. And thereafter, I would have an RPA tool to pick it up and start processing further. So collecting invoice is give and take 10 to 15 minutes job, not more than that. Now let's come to the next part of it. Once the invoice has come, what do? I start reading the invoice, capturing the data from the invoice. So the next slide will show you, yes, the invoice has come. This is a PDF or a scanned copy or a JPG copy of the invoice. We start extracting the inputs from the invoice. Now I start doing something which is in the interest of the taxi. I start validating this invoice. I first say whether this GSTN is active or not. I see whether this GSTN is the invoice enabled or not. Then check whether the QR code is a valid QR code and read the QR code. When I read the QR code is nothing but a e-invoice data. So I get 8 data points of e-invoice. I match it with this data which I have extracted from the invoice. So what do I get? If things are matching, it means this e-invoice data is nothing but e-invoice. And we all know the e-invoice data within 48 hours gets auto-drafted as GSTR1. The same comes back to you as 2A, which would mean that the invoice data here is same as what is there in GSTN. Practically, we are doing is compliance before purchase entry into ERP. I have fully validated this data, and this entire narrative that I am giving you takes not more than 5 minutes. So let's say another 15-20 minutes to get an invoice, another 10 to 15 minutes to extract, validate, and do everything and get the purchase entry ready. This is what is purchase entry all about. Thereafter, it is only exporting it into the ERP as a purchase entry and the incremental activity on GRN. Let's look into option number 3. Is just keep this slide. Just keep this slide. No, go back. Sorry, just go back. I want to remind my friends one more thing. Last November 2023, government of its own gave all of us through the IRPs and GSPs a counterparty e-invoice JSON. Why did they do it? They wanted everyone, the entire enterprise world, to digitize their purchase entry. It is unfortunate that most of us did not take any action. But government was very clear in last November that this October they will implement IMS. They wanted this entire thing to be digitized. So government has been acting well in advance in a very planned manner. That's the reason that we are saying is like it is in all probability going to become mandatory. They are going step by step. They are absolutely clear on what they want to do. This action they took almost last to last November, November 2023. So this once you have this JSON also available with you, once you have captured the invoice data, validated it, you are now getting line item wise data in the e-invoice station to be parked into your purchase entry. Everything, including the HSN number provided by the supplier, is now available with you. And why HSN is important is when maybe in the near future people will start discussing how to prepare the HSN master for B2B and B2C. You will realize the importance of what I am talking. But you will start getting these details absolutely to the last full stop of what is there in GSTN portal available as your purchase entry. So everything can be digitized and this entire thing can happen in 5 minutes. Let's go to the next slide and understand one more practical aspects. If many of you would be from the manufacturing setup, not all invoices come by email, they come by trucks also. So if you see into the next slide, you will find that a truck is about to leave the vendor. What happens when the truck is about to leave? The vendor will generate an e-invoice, he will generate an e-way bill. Friends, this e-invoice and e-way bill can be made available to you through us within 2 hours, which would mean by the time, let's say, the truck is leaving from Hyderabad, likely to come to Ahmedabad, by the time it leaves, you know exactly कौन सा truck number निकला है, what all material it is carrying, what all it is doing, and by the time it reaches your gate 2 days down the line, you would know exactly which truck has come. All you have to do is at the gate, take this invoice copy, physical invoice copy, scan it, and ask it to go for unloading. The minute you scan, I've got the image. I will do the extraction, validation, counterparty, invoice data is available. My purchase entry would be ready by the time the truck is unloaded and ready for GRN. Let's look into the GRN part of it now. So, next it. So, once we get into this entire process, next, I am just showing you a small snapshot into the next slide of what happens in the ERP. Let's say this is an ERP. I have got the e-invoice data into the cockpit parked as purchase entry. It is not yet done as a purchase register. It is just the e-invoice data is parked into the cockpit. I would use this data to start doing my GRN activity. Also do PO versus GRN versus e-invoice versus invoice reconciliation. And in the case post GRN and quality check, if I have any difference, those difference amounts are mentioned. And now my data is ready for Miro and purchase register can be made ready. This presume the entire GRN inspection activity is taking another 2 to 3 days post the truck has come for unloading. So if you now collate, friends, manually if the bill is coming through truck 2 to 3 days, 1 day to extract and do the entire entry validation, another 2 to 3 days for GRN and inspection. 5 to 7 days max, your purchase entry can be ready. An invoice of 1st January can be made available to all of you for IMS action by 7th of the same month. This will ensure that every single invoice, except for the month-end cases, even there you will get a 1 week's time. Even if I am doing it on the 5th of the month, by 12th, you have up to 12th time available for this guy to take action. Good enough time. So 7 to 10 days, if every invoice gets time to take corrective actions with a module, which not only helps you take reconciliation, but also gives you bulk upload, thereafter gives you the notification module and helps you with the entire process end to end, you would be practically be ready to take the entire IMS action head on as and when it is made mandatory, which I presume is only till such time the time is taken to get the finance bill cleared from the RS and LS. I think the notification will start shooting very fast. So this is from my end about the IMS part. I think I would request Tapas to take up the IST, please.
Thank you, sir. So there is also one amendment so far as the ISD provisions are concerned. The provisions of ISD, the definition underwent a change, as well as the provisions under Section 20, which prescribe for the method of distribution of ISD. The changes were prescribed in the budget of February 2024, and the amendments were notified to be effective from 1st of April 2025. There were certain representations and some amount of industry would still wanted some time to implement ISD entirely. But then it seems that the government is determined in making the ISD mandatory. The change that is coming into this budget is that in the section in the definition section as well as section 20, which prescribe for the distribution, it only covered reverse charge transactions where the tax was paid within the state, that is intrastate transactions covered under section 9 of the CGST Act. Interstate transactions covered under reverse charge mechanism covered under section 5 of the IGST Act were not covered in the definition. So in order to ensure that there is no interpretational issue, the change has been made into the ISD provisions, making sure that the distribution of credit by an ISD for the invoices which are covered under reverse charge mechanism, even if these are interstate transactions, the ISD will be required to distribute such credit. How the distribution will happen is that the normal registration within the same state, the distinct person within the same state will receive the RCM invoice. This normal registration will then cross-charge this invoice to the ISD registration, pay the tax, of course, under reverse charge mechanism first, and then do a cross-charge under forward charge to the ISD so that the ISD can then distribute. ISD being a kind of a postman provision, it is not allowed to do anything more other than receiving an invoice and distributing the same. It is not allowed to pay the tax as well. So while there are certain corners where it is being said that based on this amendment, now ISD will be able to pay tax under reverse charge and distribute, I would beg to defer those interpretation. I feel that only change that has been made right now is for ISD to be able to distribute IGST credit, which was hitherto restricted only till for CGST and SGST, particularly for reverse charge invoices. So again, and these invoices, I mean, these amendments specifically for ISD, it has been very clearly mentioned that these will be live from 1st of April 2025. So it seems that the government is totally determined on making ISD mandatory from 1st of April 2025. So I would still urge whoever is not still sitting on fence, not yet decided to implement ISD, you have multiple registrations and do have an office, common office where you're receiving these invoices, but have not taken an ISD registration. I think the 2 months time is something where still reasonably you can implement these changes. If not, if you do a further delay, then I think one would be really gasping for air once the ISD provisions come into effect from 1st of April 2025. Now, very quickly, what these amendments are, which were prescribed in the previous budget and are coming live from the 1st of April 2025, is that ISD is going to be mandatory wherever you are receiving common input services which are used by different registrations across the country. You have to do an ISD. Till now, people were following multiple interpretations. Somebody was doing ISD, somebody was doing cross charge. Some people were not doing anything, saying that this is not mandatory. And in terms of cross charge, I have a benefit of the circular since I don't have any exempted turnover. Now, positions will have to change where services are received at an HO and these services are ultimately consumed by different locations. ISD will have to be done. You can no more rely only on cross charge. So this is something which has to be taken care of. And if you don't do this, down the line, the states are going to fight for their share of revenue if you don't distribute the credit to the relevant state where the service has been consumed. In those cases, the recipient states which are deprived of the revenue are likely to send notices to you. How the credit has to be distributed through ISD, you have to distribute the credit into eligible and ineligible. If the credit is attributable to a specific location, the credit has to be distributed to that specific location. And if the credit is distributable to multiple locations, then you have to distribute the credit on the basis of their turnover. You have to prorate the distribution on the basis of turnover. This turnover has to be taken for the previous year. That is the previous year's turnover within the each GSTN has to be considered for distribution. Only catch here is that if a specific location has been added midway during the year, in that case, you have to see the turnover of the previous quarter rather than looking at the turnover of the previous year. It has to be also noted that the distribution has also to be made to registrations which are making only exempted supply. And this is in fact the underlying fundamental reason why ISD is getting implemented, that if you transfer a credit to a registration where it is making fully exempted supply, that registration is not going to avail the credit. The credit will be marked as ineligible, and that particular state will get the revenue, which right now was not getting transferred to the respective state, which is the underlying reason why ISD is being made mandatory. Uh, since 2 months are only left, I think it is also important for one to understand the challenges with respect to implementation of ISD. First is determination whether a particular invoice is pertaining to my ISD registration or it has to be sent to my normal registration where it has been consumed. And if it pertains to ISD, one has to also determine at the time of booking itself whether the credit is eligible or ineligible, as well as tag these credits to the respective GSTN so as to distribute. So if an invoice pertains to only some specific locations, one has to ensure that the specific locations are tagged so as to distribute the credit appropriately. Similarly, in case of the supplies which are outward side on the ISD, once you are distributing the credit, one has to ensure that the distribution happens in terms of a proper ratio of turnover, as well as once the distribution happens, the ISD invoice is generated. One is also able to select the recipient on a dynamic basis based on the consumption of each invoices. And lastly, determination of the specific locations to which the ISD credit has to be transferred. At Cygnet, we have developed a comprehensive solution which gives you the reconciliation facility. So similar to your normal input returns, that is the GSTR 2B reconciliation that happens before filing GSTR 3B. Same thing happens with ISD returns as well. Your supplier files their return. It appears in your GSTR 6A. You have to do the reconciliation of your purchase register of ISD with the 6A return, and the credit which gets reconciled, that has to be distributed through the GSTR 6. So at Cygnet, the solution that we have developed has an inbuilt reconciliation module. You will be able to do the reconciliation of GSTR 6A versus your purchase register. Once that reconciliation happens, all the invoices can be selected and distributed either to all the states or the specific states where distribution has to be done. Not only that, the system has a functionality to have a pre-built or a pre-filled turnover ratio. On the basis of the turnover that has been fed to the system will auto calculate the distribution or the apportionment of IGN, the credit through the ISD mechanism. It can be integrated through various ERP solutions as well. Not only through our Cygnet's portal, we have also prepared ISD cockpit solution where at the time of booking itself, the user will be able to tag the particular ITC to different locations, make invoice level distribution, post the distribution to the different business places or the different registrations within the SAP, do transactional reconciliation through our Cygnet portal's APIs, bring the 6A and do the reconciliations, and prepare a ready GSTR 6 files, that is the inward side of receipt of credit as well as the distribution of credit. That entire distribution file can be prepared, the GSTR 6 file can be prepared, which can be directly synced into the Cygnet's GSP portal, and the Cygnet and the GSTR 6 ISD return can be filed. And all this with a proper audit trail is something that we have prepared on the in our Cygnet solution through SAP as well. We'll move on to Q&A. We can see that certain questions have been posted onto the Q&A box. There are 2 questions, so we'll take it right away. The first question mentioned is that one question, if the supplier raised an invoice and it's registered in GSTR 2A, but not accounted by the buyer because of some internal process adherence like invoices not uploaded in Ariba vendor portal, and hence the buyer is not able to take the GST credit, who should be liable here? I mean, who is the problem taker in this case? Is it the supplier or the buyer? Anil sir, do you want to take this question?
Just a second. The first one, if the supplier is the
First
invoice
one, yes.
the supplier is the invoice.
Supplier has raised the invoice, it is appearing in 2A. The buyer has not recorded it in books of accounts because of its problem in Ariba or vendor portal or for whatever reason, because they have not booked the invoice, they are not able to take the credit. So the attendee is asking whose responsibility is it? Is it the supplier's responsibility or the buyer?
No, I think it is the buyer's responsibility. It is nowhere the supplier's responsibility. The supplier has given a right invoice. So long as you have and you have paid your taxes, the supplier is clear. I think it is the buyer who has to ensure that if he wants to take the credit, he has to ensure that. And naturally, I think an IMS action to this will already happen because this invoice detail will anyway figure into IMS. He will not have the PR data, so he will have no option to keep it in pending. So that's what is likely to happen in all probability in this case.
Answer. Perfect. Perfectly answered. The next question, it seems to be in continuation of that question only, and it says that since the buyer had not accounted the invoice in time, they had not taken the credit. Now the buyer is saying that I am not able to account this in my current fiscal years due to the income tax and other statutory reasons as well. The buyer is asking the supplier to issue a credit note and raise a fresh invoice in the current financial year.
I think again, in case of this, in IMS also, you can keep anything pending only for 6 months. Thereafter, there is no actioning available. So if I go strictly by the rules of the IMS, if the data has come, you are expected to take an action in 6 months. And that is what is the advisory parallelly being discussed on the e-invoicing front also. As and when GSTN comes onto that understanding onto various groups that they are doing. And so you will be forced, because we are talking about something from the past. But moving forward, you will be forced to take an action within 6 months. So that is where the way you are approaching to each of these invoices, your entire approach will change.
Slight correction, 6 months is correct if the invoice has come into at the end of the year. Let's say if the invoice was received in the month of, say, March 25, then I had 6 months, that is till the month of October to take action. But if it was earlier, the time limit to keep the invoice pending is the time limit to take the credit. If you don't keep the invoice pending till that time, your credit on that invoice is lapsed. Just to add to what was asked, I think it is the buyer's responsibility to account the invoice, etc. properly. If not done, then I think the buyer, if contractually in a stronger position, they may ask the supplier to change the invoices, or if there was a mistake, some other mistake which the buyer was also not responsible for, then buyer might ask to do that. It is technically possible to issue a credit note and cancel the invoices if the if the buyer is facing problems in recording the invoice in the current year. But again, since the fiscal year changes, the supplier remains the same. The supplier would be in a problem. It might have, the department might also demand interest on the fresh invoice that you might have raised. There might be certain unintended consequences, which is where the entire cycle that Anil sir showed to record the invoice on a timely basis, to have those robust procedures to record the invoice on a timely basis is something which is really important. There are a couple of invoices on ISD. If there is no turnover in another state, how the turnover ratio will compute. If in the previous year you had a registration, but that registration did not have any turnover, in that case, no distribution happens to that state. But if you are saying that this new this particular registration is a new registration taken in the current year, in that case, you have to see the turnover of the previous quarter in those cases where a new registration has been taken. In that case also, for the previous quarter where this new registration was not there, you will not be in a position to transfer the credit. Next question is, what are the consequences if ISD registration is not taken and the entire credit is taken by one unit? The reason for the government making this entire ISD mandatory is that the recipient states, so let's say I have a head office in the state of Gujarat and I'm receiving certain invoices which are actually consumed by other states, say Maharashtra, Tamil Nadu, Bihar, so on and so forth. In case of specifically ineligible credit, these states are being deprived of this credit. And of late, the states have realized that the way the entire structure of GST has been formed, these are certain lacunas which were there. So ISD was always meant to be an optional functionality since the excise days, wherein it was a functionality additionally given to the excise manufacturing units who were not able to utilize the credits received of services at their head offices. So while it was an optional functionality, the consumption based tax states have realized that they are not getting the credit for which service has actually been consumed in their state, GST being a destination based consumption tax. So if you don't take ISD registration and you keep taking credit at one state, I think the state where the credit is being taken in excess, that state would also have a problem. In case of eligible credits, that state will say that, yeah, you are taking too much of credit in my state. And where there's an ineligible credit, the other states would have a problem that the ineligible credit should have come to my state and I should have gotten the revenue which you have not received. Please expect a flurry of notices from the department if you don't follow this ISD mechanism. Next question is IMS
IMS
implemented
is
or is it
implemented. I think here again it is implemented from 14th October onwards, and statutory. I think actions have been initiated by putting the regulations into the finance bill. So the statutory part is being taken care of. Correct me if I'm wrong, Tapas. Statutory part is being addressed through the finance bill.
Yes, yes, yes.
That's it. And I think the next step which we are saying is you will soon see that it becomes a mandate to start it. The minute one says that the actions will lock your 3B directly or indirectly, it will be a mandate to start using. So functionally, if you ask me, it is implemented on the way to the statutory. Just the passing in the RS and LS is pending, and post that we all need to get into it. So for us, mentally, we need to get into that phase that it is now mandatory and start using it.
I think there are two last questions. One is bulk invoices are not able to upload in IMS above 5,000. I believe you are talking about the
Government portal.
GSTN portal, government portal. It's not even 5,000, it's 500. If you're able
500.
to, if the invoices are more than 500, you will not be able to see the invoices, which is where the need to use GSP and ASP solutions comes in, which is where we showed that even if your invoices are in lakhs or crores, you can set your pre-reconciled IMS actions. You can tell the software that if my invoice is matching with my PR, market has accepted, I don't want to even look at it. If it is not matching, I would want to make market as pending or in some cases reject, etc. Or these actions will have to be done on an automated basis if you have such a huge number of invoices.
So it is seamless for GSP Cygnet. It is seamless. There is no cap on downloading of counterparty data or even taking actions on the reconciliation and bulk upload in IMS or pushing it back into the GSTN with your IMS status. There is no cap on transaction volume.
Right. And I think this is the last question, and post which we would close the session. One branch entity is not making an outward supply because it is engaged in developing a capital asset. It is utilizing inward supplies that fall under the ambit of input service distributor. Meanwhile, another branch of the same entity is making outward supplies. How is the IST distributed in this case? So if you have only two locations where one location is not making any outward supply, it is only receiving a common, it is receiving invoices which are actually being consumed by another location, which is actually making the supplies. You can directly take this invoice and distribute it to that one specific location. I am limiting my answer to your question wherein you are saying that there are only two units. One is receiving the invoices and other is where the outward supply is happening. Prima facie, you can take a position that this registration where there is no outward supply is an ISD. You receive all the invoices here in this ISD registration, and 100% distribution can happen to the other location where these services are being actually consumed.
Last one.
Last one, if there is any changes in GSTR 2B, if updated in IMS, upload GSTR 2B in October from GST portal. I think the last question is not clear, but to put it very simply, if you are changing any action in your IMS after generation of GSTR 2B, you can come back to the GSTR 2B module and recompute your GSTR 2B. So after a generation of GSTR 2B, if you take any changes, make any changes in the actions in IMS, you have to recompute your GSTR 2B. Then I think that's it.
Thank you everyone for joining. We will answer your questions in an email and also try to share the webinar recording for your reference.
Thank you very much. Thank you.
Thank you everyone for joining.